We start a brand new series and 5 month on a trot. Yes, 5 month on a trot, Nifty has declined, and that has never ever happened. It only happened like once upon a time. Yeah, I mean, it has happened only once upon a time. Somewhere in 1990s when Nifty actually fell for 5 months on a trot now, and frankly, that data point is actually irrelevant. Last time when we saw this kind of a decline was actually 1996. But what is more relevant is that in last 5 months where the damage has happened. While Nifty optically is down 5 months on the trot, how much the small cap has fallen, how much the mid cap has fallen, and how much the bank Nifty has fallen. In this leg of this Panch ka mukka, if I may use, Nifty is down 14%, Bank Nifty down 9, small cap down 21, and mid cap index is down 19. So more than anything else, it's the broader end of the market which has just got smoked. Sandeep, mathematically, well, data is data. It has only happened once, and that was 25 years ago. There is no event, there is nothing on the global level, there is no news, there is nothing like 9/11 or COVID, and yet markets have fallen. Isn't it surprising?
So I think one leg of the fall was obviously expected that the markets, the speculative activity was very high. IPO valuations were very, very high. There were five IPOs every week. So I think there were clear-cut indications that markets are overheated. But that said, the kind of delinkage we've seen of the Indian markets from a majority of the global markets, that's been more surprising. Where many markets, if you see, let's say the Hong Kong markets, even after the fall they've seen today, are up around 18-19% for this year. Many the German markets are up nearly 18 to 20% for this year, like 15-16% for this year. And same is the case with many other markets. Now, most surprising part has been that the delinking sort of, and the degree of sell-off in many of the segments of the market also, like to some extent, being justified on the small and mid cap side. Like on the large cap side, also, like many stocks have got sold off quite significantly, where fundamentals for the large caps for next year might not be as bad, and for some set of mid caps. So I think this is a phenomena which has been rare, more in the sense of not this 5 months of continuous decline, etc., but more in terms of the way we've got dealing from global trends.
Okay. So we have been delinked on the way up. Global markets were up, we were delinked. On the way down, which is what has started now, Sandeep, in US equities and most of the other asset classes, including Bitcoin or some of those tech stocks, or for that matter, even in US, heavyweights. Are we likely to remain delinked, which is that when US markets are down, we will go up?
That normally never happens. Like if we see a drastic fall in global markets, it's if the sentiments as it is are bad, and then you enter into March, which is a low liquidity month in India, the probability that a delinkage will play out is low. However, I think the big concerns at the start of the year were the unprecedented rally in the US dollar and rising bond yields. So both seems to have reversed in some ways. Like even after yesterday's rally in the US dollar index, it's still down 2% for this year. The bond yields are down significantly. And the US market capitalization to world capitalization continues to be at 70%. So at some stage, I think as things stabilize, we will see. I would think that this year we would see that some flows should come back to emerging markets from developed markets, and that will set the tone for outperformance. Now, the timing of that we have to see. But Indian markets, I believe, are deeply oversold. They are relatively cheap, and from our perspective, we are also largely fully deployed because I don't know whether we can time the bottom, etc. But I would think that downside should be limited from here.
Quite interesting. Sandeep, curious to know then, what is it that you've been buying, both large as well as SMIDs?
On the large cap side, um, I think we've been accumulating stocks like Bajaj Auto, L&T on the downside, and some banks like Kotak we bought earlier, so not buying right now, but Axis Bank. So I think these look decently well placed from the large cap side, and which are what are coming to mind immediately.
Any mid and small caps, Sandeep, which also come to your mind, anywhere where you may have bought afresh or even added to positions?
I think the NBFC sector, I think should bounce back next year. So stocks like L&T Finance, Mahindra Finance, etc., and people have their own pick of NBFCs. We have also been slowly accumulating IDFC First Bank because I think that's fallen a lot, and there also most negatives seem to be built in. So that's on the financial side. On the other segments of mid caps, many of the construction infra companies have seen a deep sell-off. So there are some stocks that we hold already. So we bought some of them more in the fall. Stocks like Ahluwalia Contracts, Tech, Webag, NCC, Kalpataru Power, KEC International. So I like all these stocks in terms of valuation and next year's growth prospects. The stocks have been continuously falling on a almost daily basis. So since we bought, the stocks have also declined further. But then I would think that on a 1 year perspective, the prospects still remain good.
Is also ready. So Chandan, what is in store now? I mean, yesterday markets were flat. Today it's a gap down. Are we likely to slip into some kind of a domino effect could get created after today's gap down? What is your view, Chandan?
Good morning. Thanks for having me. So Nifty has been making lower top, lower bottom, and this is going to be the 5th consecutive negative month or series as of now. So structure is weak, and we have noticed that every small bounce is being sold, or in fact, the bounce is not happening in the market. FIs are continuously selling, and just a couple of days back, market had broken a key level of 22,800 zone. So till that level is not surpassed, the immediate structure will be on pressure, and market has potential to go down to us 22,000 marks. Even if I look at the data setup, sustained call writing is visible. But only thing is that India VIX is cooling down even after the market decline, which indicates somehow some sort of stability. So I believe some more profit booking could be there, but market now may find some support near 22 kind of level in next 1 or 2 days.
And then what would be your stock bias? Would it be an all sell list still, or are there any buys in there?
Frankly speaking, advanced decline ratio of the market is negative. There are very few counters which are holding the gains. But with the view that selective pockets which are holding the strength are likely to do well in this market scenario, because most of the counter which are negative has gone into the deep oversold territory, and it would be tough to sell them at current zone. Better to sell on bounce. So I picked the two trading idea both on the positive side. First is buy on Chambal fertilizer. We have seen positive price action with better rollover activity. Stock has given a long consolidation breakout of last 8 to 9 months, holding well above 565, 570 zone. And recent price structure can take it towards 600 and even higher level. So one can buy with support of 562 for an upside target towards 600 level. Second trading idea, there is buy on Bajaj Finance. We have positive on the selective financial name, be it Bajaj, Chola, Sriram Finance. And I believe financial Nifty or Fin Nifty could do better than the Bank Nifty or Nifty index itself. So recommending to buy on Bajaj Finance as it completed a positive price pattern, a triangle or pole and flag, or outperformance could continue to hear the sentiment. So with support of 8,500, one can buy for an upside target towards 9,100 levels.
Okay, interesting. That's the stock ideas coming in from Chandan.
Just scanning through a lot of stocks here. And yesterday, this entire RBI action did prompt, banks. Sandeep, I look at one problem, and I think the government has done what they can do. Liquidity got crunched and they've opened the walls of liquidity, both at the MFI level and even at the aggregate bank level. So when do you think lending will start picking up? And if lending will pick up, who will benefit? NBFCs more or large banks more? And what should one buy? Because RBI has done whatever they can do to open the floodgates, open the gates, so to speak.
No, Nikunj, I don't think they have done as much as they can do, because the issue is that the banking sector liquidity still is in deficit. So till it remains in deficit, we'll see that both deposit and lending rates will continue to remain high. Like most of the banks are unlikely to change the MCLR format of lending, although repo linked loans have become cheaper, and April mostly we'll see another cut. But till the liquidity improves and deposits start coming, rates also ebb off a bit. The impact of the measures till now are limited at best. So the new RBI governor has done a lot, but I think they need to take vigorous steps to actually take it back into surplus, so that this once it goes into surplus, then we enter into April, and April to September typically is lean season. So then what will happen is that the liquidity will remain in surplus for some time, and prior to the festival season also it remains in surplus. So that acts as a positive for the economy.
Well, the one pocket you couldn't get your eyes off was Ultratech's disruption within the wire and cable segment. Not just the fact that, the entire wire and cable segment really cracked hard. I mean, look at a KEI that fell about 21.5%. Polycab was down nearly 19%. Havells, even though the wire and cable segment is a small portion of their revenues, 6.5% was the cut that you saw there. And even Ultratech alone fell about almost 5%. Sandeep, just wanted your thoughts. You think the street kind of overreacted on the news? We were discussing this last afternoon as well. Ultratech's foray into wire and cable segment, because that offers healthy margins for them. And let's talk about Ultratech first.
So there are two things. One is that I think some of the investors see it as an unrelated diversification, although Ultratech sees it as a related diversification because it is related to building, construction activities, etc. So I think that's every individual's take. But some investors would obviously like that as cash flow gets generated, it gets passed on to the shareholders in the form of dividends, etc. So I think that's the issue which Ultratech specifically faced. On the wires and cable segment, I think the valuations at which these stocks were trading was obnoxiously high. Like 50-60 P you cannot give to a wire and cables company, which is largely commodity. Although there could be entry barriers in terms of approvals, etc. required, but then still it remains a commodity. Typically, till 4-5 years back, when valuation paradigm was more reasonable and people used to evaluate small and mid caps in a different manner, the P's these stocks would be maybe 15 times. These stocks were trading at 50-60 times. So those valuations obviously were unsustainable, and a small disruption like this has created that understanding sort of in the mind. So I would think that these stocks, while they might keep on bouncing back after deep falls, but valuations will keep on declining going forward.
I'll just wrap it up with one follow-up question on power. That was the go-to sector. It's not that power demand in India is going away. It is not that the government is not committed to it, but all the power stocks, from NTPC to Tata Power, from power financiers REC to PFC, from solar companies like Premier to Wari, from power cable companies like KEI to Polycab, everything is down. Where are power stocks headed?
So power always is a sector which requires very huge capex, has low ROC, and again the run up was very rapid. And we recently saw that the PLFs of thermal gas-based plants, all the PLFs actually came down over the last few months, and the average merchant tariffs also were down. So now there is some prediction of that the summers again could be hot. So we could see a revival of merchant power demand overall. So there's a possibility that some of these stocks like Tata Power, JSW, NTPC could see an uptick as we move into the summers.
Sandeep, great to chat with you as always. Thanks for your time. Vaishali, one question to you on both Ultratech as well as the entire wire and cable set of stocks, your KEI, Polycab, Havells. Do you see further selling coming in today?
Actually, I don't think so because the way Polycab has been beaten and even Ultratech, I think it should show a bounce from here on because this news was unreasonable for these stocks to really correct to this extent. So, in my opinion, KEI, I mean, all these stocks that individually I'm seeing, I think one can expect a bounce.
A bounce is what you should expect after the stocks cracking as hard the way they did. But Chandan, what's the prediction for this series? You know, basis the rollover data, what kind of resistance would you mark for the Nifty, not just today, but going forward as well? And where do you think the index can take support? And even Nifty Bank for that matter?
So like Nifty has seen rollover of 83%, which is higher than last series or 3 months average of 80%. So rollovers are slightly higher. And usually with market declines, if rollovers are high, that indicates that shorts are carrying their positions to the next series. Even if look at the Bank Nifty, the rollover is 81.61%. That is slightly higher than its 3-month average of around 79, 80%. So rollovers are higher in Nifty and Bank Nifty both, and in this month, both the indices has fallen from their higher levels. So I believe the shorts have carried to the next series, and because of that, their weak effect or the weakness could continue. But at the same time, we have multiple support in Nifty near 22 to 22 zone, looking at the retracement or looking at the option regime. And similarly for the Bank Nifty, the good part is that it remained weak but managed to hold the support of 47,850 to 48,000. So 47,850, 40,000 for Bank Nifty and 22,222 or 22,000 for Nifty could act as a major support to hold the recent major decline of the market of last 4 to 5 series.
All right, so those are the levels that you should be watching out for. But with this, let's also take some of the mid-cap bets from both of our experts then. And Vaishali, you go first. Tell us which is the stock that you're eyeing today.
So, well, on a positive side, I would look at SRF because it has got an established trend. And you see, yesterday's market, in spite of all the negative move that we've been witnessing, the stock is holding on very well. So, with a stop loss of 2750, I would look at 2950. And one stock that is sell is SBI, as I mentioned. Well, I think this is ready to go towards 680 and 720 would be the stop loss.
All right, so buy coming in on SRF while a sell call retain on SBI. But Chandan, what about you?
So I'll be very selective and will limit myself to very few names looking at the market scenario. So I'll be with Chambal Fertilizer with the view that somehow now the agri or fertilizer chemical could be in focus. I believe this is one sector where some renowned buying is happening even after the market weakness. So Chambal could be my preferred pick, which has given a consolidation breakout of last 8 months. Higher top, higher bottom with rising support trend line is holding the stock on higher side. So with support of 562, we are recommending to buy for an upside target to a 600 in Chambal Fertilizer.
If you like this video, then like, share and subscribe to ET Now.